Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive right in, take a look, see what's going on today. If you want to follow me, it's at @Finance. And if you want to join our community, finding-value.com, where I dive deeper into all these topics, subjects, sectors, looking for investment opportunities and sharing those opportunities with everybody in the community. I do that through midweek updates and through question and answer sessions on Zoom calls on the weekends, so you can interact with me directly. If that is something that interests you, you can sign up using that special coupon code. It ends up being $25 for the first month only on the monthly membership. And you get a larger discount if you want to swap to the monthly membership using that special coupon code. And you can either directly sign up or swap from the monthly to the yearly if you'd like to do that. So Sahara, it says SPX, more bearish plots, but is there a bullish setup on the VIX? I don't know. That looks pretty weak. You can see that he's trying to do Elliott wave counts through there. It does look pretty weak, and it could be rolling over. What would cause such a thing? What would cause such a thing? And I've got the dollar here. That's looking strong. We go over the daily updates, and obviously I put the arrow in there. That's in an uptrend. Yields. That is the culprit. I think if we start to see this breaking higher, specifically above 4.5, going on to 5% up this way, it's going to put a lot of pressure on financial assets, S&P 500 and the NASDAQ. So is that front running what yields are going to do? Are we seeing selling pressure in the S&P because that's going to happen? I don't know. But usually there is a correlation where the S&P and yields go up together up to about 4.5, 5% in that general ballpark. And then they disconnect where if yields continue to go up, the S&P rolls over. And I don't know if that's exactly where we're at. It might be too early to say that, but it could be. It could be. So that is something to watch. And I do think that the S&P and say something like Bitcoin's another one where you could see this fall because we're coming out of cycle. So it's the whole cycle turning. And the S&P, Bitcoin, NASDAQ, here's the NASDAQ for you. You can see we're going to start to put in a big bearish engulfing candlestick on the monthly if we finish the month strongly to the downside. And then the big red candlesticks start to show up. Now, I don't know if this is the top. I'm not going to come out and say, oh, this is topped. A lot of people like to, call topping calls, and that's not how I invest. I look for value. So I've been looking for this to roll over for a while now. From about here on, I thought we were gonna roll over and maybe we get a double top. This is probably just an extended double top or something like that. And maybe it still has a melt up. I don't know. Maybe they do QE. Maybe they hold interest rates down, and perhaps money flows in here. But the telling sign for me, and as bullish as this chart looks, and how everybody gets so bullish, I look at the world through ratios. So let me throw a ratio chart up here. This is XOP, which is energy, divided by the NASDAQ composite. And this is what I see. I see a double bottom, and this is the cycling through. So the NASDAQ, this is the bottom of the NASDAQ all the way down to the top of a relative value move. This is bottomed. It has bottomed. I can draw this like this in a falling wedge formation. And we are putting in a double bottom. So we can kind of throw this across there. And then the double bottom is this. And then if you look on the right-hand side in that circle there, we're interested to see that maybe, let me go this way, maybe we're putting in a big bullish engulfing here, where this is the bottom of energy versus NASDAQ, and that this entire pattern is a bottoming pattern that will move higher with time, and energy will outperform the NASDAQ. As we see this, the way that I view all of this is that this is going to come all the way up in that cycle. Now, this is all big long-term, big picture view thinking. And this is not the only chart. You can put XOP versus SPX. You can do XLE. They all say the same thing. They're all interconnected through interest rates and currency exchange rates. So it's like the Federal Reserve can't stop this move. So some people say, well, yeah, they can stop it. Okay, so let's say they raise interest rates. What happens? The economy slows down. They lose revenue. Governments lose revenue. And what is their response? Lower interest rates. When they lower interest rates, what do you get? You get, well, also, when you raise interest rates, unemployment goes up too. So they lower interest rates to combat unemployment and to combat inflation. Or I should say, to combat unemployment and to combat a slowing economy. Sorry. So inflation comes into the system, interest rates rise. That's what slows inflation, is unemployment. And they're trying to balance unemployment and inflation simultaneously. The only way they can do that is if they lie about the numbers. They lie about inflation and they lie about unemployment. It's the only way that they can kind of somewhat manage price movements going higher. But look at this chart. It's in everything. XOP versus SPX, double bottom. COPX divided by SPX. I've never done this one. Let's just try it. There's your bottom. So what you get is you get a falling wedge into a corner. And now you're putting in a big bottom base. And then we're going to break out and move. We can put GDX, or yeah, we can do GDX divided by the S&P 500. So there's your bottom. I probably did this on log, but there's your bottom there. It's all the base, and you can see we're coming on up, and this is going to break out of this base and work our way on up. Now, the big money is made from here to here in the S&P. That's the big money. From the bottom of the cycle all the way up. The bottom of the cycle here is where big money is going to be made in gold mining companies. And then you have to wait all the way till we get up to some higher level. And this is your base. And we're about to start that big move. And we can price pretty much anything. Here's the ETF SLX against the S&P 500. So this is VanEck Steel ETF. You guys see the falling wedge on the right-hand side? So this is your falling three-hump consolidation. Your three-hump consolidation is 1, 2, and then the third is here. This is one of them, and then this is another. Sometimes they get hard to see. Then you put in a bottom. So you usually get like a resistance line coming across through here. And then you can get a bottom. Then we'll come on up and go all the way up over time. And it's going to be a big bull market. It's going to be about 10 years, maybe longer, for commodities and hard assets to outperform. The advantage that you have as an investor, you have to first understand what the herd thinks and the psychology of the herd. The psychology of the herd is all worried about short-term market movements. They look for news. They try to make decisions based off news and opinions. You need to take advantage of that. What you want to do is you want to extract things from raw data. The charts I would consider to be more raw data. And this is where you gain your advantage. You take a longer time frame and exploit their short-term thinking for value in the short term, where you buy stuff that's real low and then exploit that value out of the market. And the way that you're doing it is you're doing it through a differing you're gathering data differently than them, and you're taking a different time frame. So you can be both bullish and bearish the same stock or sector, but it's just on different time frames. So you could be bearish in the short term, but still buying because it's so cheap, and be an absolute bull, raging bull on the long term. So you can have these different mindsets, and I'm not bearish in the short term. I'm just giving you guys examples. And you can price these things against anything. COPX versus the Nasdaq, and again, this is that falling wedge that we see coming down, and then you create a base, and then you can see bottom there. This could be kind of like a double bottom, and then we came up, created another falling wedge, and I think this is going to work its way on up. When that works its way on up, my guess is it's going to be from them lowering interest rates and then money coming back into the system. And they're trying to balance this going up with interest rates. Interest rates are trying to hold this down and keep a stronger dollar. There's all these different dynamics in the market trying to hold it down. They're not going to be able to hold it forever. The cycle will turn on them. And that's your advantage, is that you know that these things exist and where they're located, the value of them, and that hard assets will outperform financial assets here. And we could start to see these financial assets start to roll over. They start to sell off. And then what's going to happen is that this is going to put pressure on people who own Bitcoin. If this continues to go lower, it's going to put financial pain in the pockets of those who own Bitcoin. And what's going to happen is that financial pain is going to cause action. People are going to say, I don't like Bitcoin. I'm losing money on it. I got to get out of this. That's the psychology working on those people. When it starts to come out of favor, they sell financial assets because of the pain in the account that they are feeling. And then they will go rotate into something that is performing better. They chase price performance. That's all people do. What we're doing is we're front running those money flows. We're front running the pain that people will feel. We're getting in before that. Now, I can't tell you when exactly other people are going to sell some of these assets and look for something else. Depends on their pain thresholds, depends on how good they are. If they're very good, maybe they sold this top up here and are buying before everyone else notices. But I think that's what's coming, and that's what it kind of looks like in my opinion, and we'll see what happens here. That's Bitcoin priced in US dollars, and it looks kind of ugly. And that's the same chart as the S&P, very similar. It says gold is on its golden path to glory. Long gold, short stocks, except mining stocks. Dow Jones versus gold. And these, each one of these periods that we came down was a commodity bull market, every single one. So when gold outperforms the Dow Jones and it compresses down, he has it down to 0.5. And if we get to 0.5, oh my goodness, we are we will have gone a long way, both on gold and probably on the commodities commodities in general. But this is what we're looking at. This is part of the cycle, and it's going to be a pretty long time. It's going to last for a while. Lithium is the most hated metal right now, and the news is flipping bullish after bullish. Lithium prices on the move up, and spodumene prices at their highest in 15 months. Yep, we bought the bottom of the bottom in lithium on the website. There's still really good entries in lithium at the moment, but they're not going to last forever. They'll be there for a period of time, and then they'll move to something else, and we'll look at other sectors for potential investments. But it's okay right now. It won't be for long, though, I don't think. Gold and silver miners are some of the world's most undervalued assets according to most metrics, including when measured against the U.S. money supply. So this is XAU divided by the M2 money supply. We've got that breakout that's just starting to come on up. We're just coming off the mat here of absolute bottom pricing. A lot of people are going to be bearish at this bottom, and they're still going to be bearish. They're going to be disbelieving the move. The money is made when everyone else doesn't believe in it. That's when you have to buy. This is a really cruel psychology game that investing is all about. It's cruel because when you're a kid and when you're in high school and in college, you learn to become a part of society. You learn to fit within the herd. You go to school and learn this, I don't know, I'll just say a standardized thing that they've got, some sort of program. And then everybody learns it at different schools. And then you guys, well, everybody competes against each other, knowing the same things. In order to extract a ton of value, you need to think differently than everyone else. You can't just be a cog in this big mechanized world. So in investing, you kind of have to just step out of the crowd, and you got to buy things when things are cheap, and you have to be patient. And this is going to be one of those things that I think people are going to make a lot of money on, gold and silver mining companies. While cattle has been rolling over, corn has been carving out a multi-month base. Every washout into the support zone has attracted buyers. Every panic drop has been met with accumulation. There it is. And I agree. This looks very good to move on up. It's a double bottom. We can look at corn. Let me scroll down and find it. I think I know where I keep it. And we just got to get there. 1 second. Here's wheat. Wheat is breaking out. There's your big downtrend. Squeeze into a corner here. So we can throw this here. So there's your corner squeeze, and we've broken to the upside there. See it breaking out? And we're on support. This is a big long-term support area. So here's your big shelf, your breakout, your retest, another big run, and we're sitting on top of support. So this is another level up here. Eventually, I think we'll go to another level on top of this. It'll be because of money printing and a weaker dollar. So I think that we'll do something like this, like that. And that's what this is. So that's what I think is coming. So that's wheat there. We've got soybeans doing something very similar. A launch pad into another launch pad, and then we'll go up here. And then corn, corn's doing the same thing. It's even got the same kind of fractal movement like that. So yeah, we're just starting to break out for corn. So this is the beginning of it all. And there's your double bottom that he has posted. And this is your falling wedge there. So yeah, it's looking good for soft commodities here. Coming down, EIA inventory moves. This is November 19th. Crude was down 3.4 million barrels. Gasoline was up a little bit, and distillates up a little bit. So we still had a net draw on all of it. I think that's surprising. A lot of people are saying there's all this crude on water, and we'll see if it shows up. I'll keep an open mind. It says you saw a huge outperformance move in silver miners lately. Link post below. Just like that with the metals, playing miners is all about timing. Yeah, he's got a lot of stuff there. I'm not going to read all that, but SILJ versus GDXJ, you can see in 2016, break higher, 2020, break higher, and then we have a break higher right now going on, where SILJ is outperforming GDXJ in 2025. You know what else that started? Oil prices moved shortly after these moves. So we're in the move, and I think we're going to see oil prices light it up here. Oil is a little bit. I like oil. I like oil because it's created modern society, and gold and silver. Yeah, I mean I like them too, very much. That's more of just money, a unit of exchange, and yeah, silver is used in a lot of things. I get it, but oil is like the foundation of modern society. So I've always been interested in that. Here's heating oil, a 1-year breakout in progress, breaking out there. You don't see this in bear markets. So when I look at all these things, a lot of people are like, well, what about a recession? What about this? It's like, I don't know, guys. I don't see it in the charts. It doesn't mean we can't have one. I see the SPX rolling over. I see the NASDAQ rolling over. But oil, natural gas is breaking to the upside. Oil's breaking. And one of the things you want to look at if you're worried about those types of things is look at yields. What are yields doing? If yields were falling off a cliff here, and they could, I'm not saying it hasn't happened. We haven't broken out yet. But if they fall off a cliff, then yeah, I would say we probably have a problem. When they fall off a cliff, that's when you see problems. But are we falling off a cliff yet? And the answer is no. So look at the 2-year yield. Watch the 2-year yield here. Now, what I'm seeing is strength. This here is a flag pattern to break higher. So this isn't, in my opinion, set up for a recession, people running into safety of the 2-year. This looks like to me that they're going to run out of it. And you can look at other people's, they printed a ton of money here. This is Japan's 2-year yield. It's very similar. Does that look bearish? People are running from bonds. They're not running to bonds. And this here is, I mean, they are literally running away. They are sprinting away from bonds. Usually during recessions, and the ones that people think, the big collapses, people run to safety. They don't run away from it. So then what you're going to see is if you were to see like XAU priced in, I think they have an XAU JPY. There you go. This is XAU JPY. They're running away from bonds and going and buying gold and silver and platinum. These are all currency exchange related things. So here is XAG JPY. Look at that run. Big old run higher. Well, why does this look different than, silver priced in dollars? Silver is the solid unit of a count. That's that 1 ounce. The rest is all currency related movements. That's all it is. It's all currency related movements. So what I am banking on is that currencies are going to lose value. Now, some people ask me, well, Andy, the DXY is going up. Yes, but this is going up relative to JPY and to euro and to currencies that it's being compared against. If this can go up while the dollar falls in value, and that's what this is, or sorry, XAU USD. This is a measuring stick against the value of this currency. 1 ounce of gold measured in US dollars, and this moves up when the dollar gets weaker. So the dollar is getting absolutely weaker, but relatively stronger against other currencies. And that confuses people. Usually in crashes, this goes down. It doesn't go vertical like this. That means you've got money problem, value problem. Complete reversal. The run-up in U.S. crude oil production was real, but it's starting to turn. So we had this short blip higher, and then it's turned and rolled on over for crude oil production tracking. And that's really a bunch of natural gas in here too. They started adding a bunch of crap in there. Ronnie says only 5% of fund managers see gold above 5,000 by year-end 2026. 0% see 6,000. These are the same people who would have laughed at him when he mentioned $4,000 gold 18 months ago. When the right tail is priced at 0 in a world of fiscal dominance, fragile real rates, and relentless central bank buying. That's not prudence, that's an opportunity. Consensus kills convexity. Gold is the cheap call option on monetary debasement. Guys, I don't really care what other people say. I don't give a crap. So their opinions mean absolutely nothing to me. If I go and I look and I just type in gold versus the S&P 500, and we look at it, And I see this breaking, trend lines, and we're going to put a horizontal line here too, because that's what's going to be breaking next, is this resistance line here. I don't really care. This is cheap. This is where you buy it. That's where you buy it. That's where you buy it. Then this is going to be a double bottom on the big long term, and we're going to come all the way up. That's my opinion. Now, if someone says, "Oh, I don't see gold going to $6,000," you know what I'm going to say? I don't give a crap. It means that doesn't mean anything to me. You know what I did? I went and bought a whole bunch of silver. I went and bought a whole bunch of platinum when it was cheap, and I'm just sitting there. Does the short-term market noise matter? No. Do their opinions matter? No. All that matters is that I am reading this correctly and that I'm lining up all of these different charts in what they say. So if oil is breaking out against the SPX, if copper is, and the equities, here's copper. Let's do copper against SPX. I didn't actually look at this one. Yeah, it's just a big double bottom. This is all that is. So you've got a falling wedge into this bottom here. I'm just throwing it up real quick. This is a big double bottom. We've got another one here, broken down trend line. And I can throw it up here if you want. You can either put it, something like that. And then you get a bottoming pattern, right? And we're in that bottoming phase right now. This will work its way all the way up. How am I so confident? Because gold's already doing it. Gold is ripping, and everything else just follows gold for the most part. This is putting in a big, huge bottom. And then, you know what this is going to turn into? Here's my honest opinion. I go look out at copper. Check this out, guys. In the year 2050, the singular year of 2050, the demand for copper in 2050 is more than 2022 and every single year of copper production before it. So the lifetime of copper production up to 2022 is the same as the demand in 2050. There's no way we've got that amount of copper that we can produce. There's zero chance. So somewhere between today and probably 2030s, we're going to hit a gigantic shortfall of copper. This is going to go all the way up. It's going to do this, and it's going to launch all the way up like that. Why do I think that? Because we're going to have a problem with the inputs of all of the companies that are in the SPX and the NASDAQ. They're going to have problems with their inputs, and people are going to realize that they are far too overpriced in relationship to the inputs that are out there priced to literally nothing. This is nothing down here. Bottom of the market, bottom of the market. And it's like that across everything. It's not just copper. It's lithium, graphite, copper, nickel, silver, platinum, everything. Everything's like that. And we've got ore grades declining into 0.4% copper ore grade and below. I mean, we are literally going to try to mine dust. This is going to get ridiculous, in my opinion. Silver, while you can get emotional and dream of that $100 target, which should eventually be reached, using charts can keep you safe during correction periods and get you back in exactly when the market is most likely to resume the violent march upwards. I never got out of it. Why would I sell this bull market? We're in a correction, yeah, but I mean, are you literally trying to trade the short-term market moves? Very difficult. I wouldn't do that. That's where I got left out last bull market. We are very early in this bull I don't know, guys. Why are we trading around the cup and handle pattern here on a 50-year cup and handle pattern at breakout? Why are we trading here? That's just something I wouldn't do. I'd hold on. That's at 51.35. Looks like he's probably missing out. Made a potential. I don't know. I would not be trading here. That's just me. Energy rally doesn't fit my intermarket correlation matrix. And here's energy as it's breaking out. This is Ecopetrol. This is Imperial Oil breaking higher. Suncor is breaking higher, and then XEG is breaking higher. The equities are all breaking higher. And, I hear all this, people are saying like, oh, I called a bear market in oil. I'm like, well, the equities are all breaking out. Looks like you're too late. Too late on your bear calls there, buddy. That's all I'm going to say. And that's what I see in all the charts that I look at too. Warren Buffett, do not take yearly results too seriously. Instead, focus on 4 or 5 year averages. Why would you do that? So you don't get too caught up in the short term. Exploit short term market thinking to your advantage, is what he's saying. Crazy to think that the money supply is expanding this aggressively, even as global central bank balance sheets have been contracting. We've seen a 10 trillion increase in global money supply in just the past 12 months. Now imagine what happens when central banks inevitably need to expand their balance sheet again, which in my view is only a matter of time. If this helps, mute the recent volatility noise in hard assets. This is the macro data point that ultimately drives the cycle in his view. And here we are, potentially going to add more to bank balance sheets as they print more and more money. It's all coming. Oil showed solid strength last week after a sharp sell-off day. Price is now approaching an interesting level that could set the stage for a potential move higher. I know oil was down today, but I think it still looks pretty good. We'll break out here at some point. Just give it time. And that's all I've got for today, guys. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. Special coupon code. We do have a Q&A session coming up this weekend, Saturday at 7 a.m. All right, guys. That's all I've got. See ya.